looking forward to hearing your voice and seeing your screen. Everybody, this
Hello.
is Prashant Shah. Hi,
Yeah.
Prashant. How are you?
I'm good. How are you?
Good. Thank you so much for taking the time to edify our
Thank you so much.
community with what I consider to be a lost art, the point and figure way. So
Yeah.
I appreciate you being with us. I've read your bio and all the accreditations you have, CMT, CFDE, and
Yeah.
you won an award for your line break charts. Can you tell me and our audience a little bit about how you got involved in the business, in the trading business, educator business, in the markets? Were you an engineer first?
All right. First of all, thank you very much for giving me the opportunity to present the subject here. Now, I'll give a brief background about myself. I entered into this business, I think, about 15 years back. I joined a broking firm. I started as a executive, opening accounts, selling Demat and all that.
Right.
And there onwards, I got an it. I used to meet so many clients in order to, because my job was to bring clients and open accounts, Demat accounts. So I used to meet traders, and I saw that people using technical analysis, using this price analysis, and doing some interesting things. I got attracted to it. So then I started looking charts, read books, and started giving those exams while working. And then I got very much interested in price analysis when I got benefited in the fall of 2008. So I thought, that worked. So I thought, yeah, there's something in. We should get more into price analysis. That's something which is in a way leading indicator. And then I came across this point and figure chart when I read Jeremy Duplessis' book while giving exam. Then I read Thomas Dorsey and many other authors and learned this subject.
Okay. What was the name of that author again, please? On the point and figure book you read?
Sorry?
The name of the author of the point and figure book that influenced you?
Jeremy Duplessis.
Okay.
His book is The Definitive Guide on Point and Figure Charts.
Okay.
So that's the book. And another book from Thomas Dorsey, Point and Figure Charts. These are the two books which I would recommend anyone to, who is interested in price analysis. That's where I learned about these charts and I started trading them. I am trading this point and figure charts on Indian markets since last about 10 years now.
Okay.
And on all time frames.
Because, I used to see a lot of people do it by hand on the floor, Prashant, and, I've interviewed close to 1,000 people, and you're probably, maybe there's been one or two other people that have adopted using point and figure for, not just short-term stuff like floor traders would use, but longer-term analysis, and it's pretty unique that you gravitated towards this type of analysis. So why don't you go ahead? Looks like you prepared some type of PowerPoint for us, so I'm going to let you go with it and strut your stuff and show us what you got.
Yeah. So actually the point and figure charts, the most important thing is just one dimension price analysis. And here I've prepared one slide where I'll explain in very brief how I read the patterns on P&F and how they are being built. It is applicable on all instruments, all time frames. Once you learn the principle, you can apply it on different instruments and time frames.
Okay, so point and figure bottom line works on anything. The only difference is beta, leverage, and the title.
Right. Absolutely.
Okay.
Yeah.
Okay.
So so I'll just explain in very brief what this point and figure is. Like we are used to the usual charts like candlestick bar charts. They move horizontally when you get candle on. If I'm looking at a daily chart, I get to see a candle on a daily basis. So those charts move when time passes by. But in point and figure chart, these are the charts get plotted only when price moves. So there's just one dimension that we consider in point and figure chart. So
Okay,
they move.
good. Okay, that's a big point that I really think about. When we're looking at point and figure charts are not based on time periods like a daily candle. They're only based upon an X and an O when price change, and that could be a couple times in a day, or it could be before you get another mark in the box, right?
That's right. That's right.
Okay.
So for example, now this is if an instrument is trading at 100, the point and figure chart is they move vertically, they move in columns. Now here, if price has moved from 100 to 125, we write it in one column. It is going up. Notice that the value of this box is 5 points. It could be any other. I mean, 5. We'll discuss what should be the value, box value of in case of any instrument. But here, in this example, it is 5. So price has moved from 100 to 105, then 110. We have written in that column as and when price has moved by 5 points. And when price changes the direction, let's say it was at 125, it went below 120, changes the direction, we change the column and write it in the next column. Right. And again, it starts going up, we write it in the next column.
Got it.
So this is how the charts. I mean, this is a very old method of doing this. So these were the charts known as figure charts. But then there were the times when there were no computers. People used to maintain it manually.
That's what I used to see. Yeah, people would do it by hand.
Yeah. So then
on an index card.
Yeah, absolutely. So then they started a method. So someone thought, why not to prepare an index at the left-hand side, and instead of writing figure every time, you can just point it. So that's how they were known as point charts. And this point system was random. So someone used to point it. People started using cross marks. Eventually, that cross mark became X. So it is the same chart, but there is an index on left-hand side, and every time the marking has happened. Then the problem with these charts were that every time you only see this X mark, you don't know whether price is going up or down in that particular column. So then the solution was, when it is going up, you use cross mark. When it is coming down, you use circle. Eventually that cross mark became X, that circle became O. So now today, this is how the point and figure charts has been plotted. When price goes up in one particular column, let's say from 100 to 125, we write it in the column of X. When it is falling down, we write it in the column of O. Right? So this is how these charts are being plotted.
Great visuals for this. Okay, go ahead.
Okay. So now, while plotting these charts, you have to determine two important things. One is the value of this box, and with the reversal value. I mean, when the chart will change the column. So usually and traditionally, which is or widely followed point and figure charts are 3-box reversal charts. So from 125, price will change the column only if reverses by 3 boxes. So in this example, reversal 1 is 120, second is 115, third is 110. So if price goes below 110, then the column will get changed. And the box value is 5, so these are known as 5 into 3 point and figure chart. Now, important is these 5, 10, 1 are absolute values. When you use any instrument, it is very difficult to determine these absolute values. So the solution is log box value. If you use log box value of a chart, you can see over a time, because price moves in a wide range, it goes to 100, it goes to 200. And if I'm using same absolute box value, it doesn't make any sense. So then we can use log box value. So like 1%, if I use 1% log box value, 1% into 3 point and figure chart. So if price goes up by 1%, we write X. Again, it goes up by 1%, we write another X. And it changes the direction by 3 boxes, that is 3%, then we change the column. So that's how the log box value P&F charts are being formed. I hope this gives you an idea. Okay,
so in log boxes, you're using percentage moves instead of a value like the 100, 105, 110.
Correct.
All right.
So now if I talk about very basic patterns that you can read on any point and figure chart, this is known as a double top buy pattern. When any column of X goes up above its previous column of X, whenever it forms one X above the highest point of previous X, it is known as double top buy pattern. Right. So this is very objective pattern in nature. I mean, once this box, we get this box, it is a double top buy pattern. So in point and figure chart, you get a column of O after X and then a column of X after O. If you compare any column of X with its previous column of X, either it will be a double top buy or not. If it is above previous column of X, it is a double top buy. If it is not above previous column of X, it is not a double top buy. So it is as objective as that. And you get the double top buy at this box price might go up from that level, but it is triggered here. So I hope you have understood what is double top buy pattern, right?
Yes.
Yes.
So you're like buying a breakout and taking out a previous X.
Got it.
Got it.
Yeah. Yeah. Exactly opposite of double top buy is double bottom sell. So when any column of O falls below the lowest point of previous column of O, it is a double bottom sell.
Okay. It's the inverse of what we just saw.
Yeah. So it is opposite of this. So now this is USDJPY. If you notice the box value, it is 0.15%. The reversal is 3. This is from September 2017 to May 2015. This is a short-term chart of USDJPY. You can notice the markers where I have marked double top buy and double bottom sell patterns. Whenever any column of X has gone above previous column of X, I have marked double top buy and double bottom sell formation.
And you rarely, it looks like you hardly ever had a drawdown on these signals. That once they went, they just kept going. If there was no reaction, they were all breakouts or breakdowns that just kept going without any failed signals. Do you have any failed signals on this at all?
Absolutely. So this is a simple breakout system. If you notice, it is a price breakout. This double top is nothing but a swing breakout system. So it is as like we see a swing breakout in normal chart. That's how it's actually the same. Number one. Number two. So it has also got period of whipsaws. But the important thing that one can understand, because of nature of point and figure chart, it moves vertically. It ignores any data where there is a price consolidation, when price is not actually moving. So that period of consolidation is something which is not taken into account while plotting this chart itself. So we will have whipsaws, but it is comparatively lesser than the usual swing breakout system. That's what I have found. Number one. Number two, we trade only based on this breakout. So for example, if I'm using a simple double top and double bottom system, though there is very much more in point and figure charts to read. But even if I look at this basic methods, if the buy has come here, there is first sell signal that has come here. Now, I don't want to present this as a simple buy and sell system, but this is a simple way of looking at the price breakouts in an objective manner.
Let me ask you this, Prashant. Is there any way, like when you have these signals, that point and figure projects a target or objective, or do you just wait until X's turn into O's or O's into X's to exit a trade?
Yeah. So now this is about price pattern. I take this further. Just before, I also want to discuss, we also do trend analysis and vertical counts on this. So I'll explain how to do it in a while. But understand one more thing: if this is a point and figure chart, and if you are here, you can know that if it moves above 2000, there will be a double top buy formation get triggered. Once it gets triggered, you always know when the double bottom sell formation will get triggered, so you can know your pattern levels in advance.
Okay.
All right. So, and from trading perspective, I have another thing, particularly when someone trades multiple instruments, like I trade futures in Indian market. And if I determine when I want to trade a particular double top buy or not, one of the important aspect is the affordability. Like if this is also a double top buy, this is also a double top buy. But look, if I buy here, I will exit on the double bottom sell. So this gives me the idea of initial risk that I can take. So the affordability predefined risk is what you always know before taking a trade. All right. So I explained the price pattern on point and figure chart. There's something called as 45-degree trend lines on these charts, which are objective in nature. While plot the 45-degree line, as you know, it is like this is a box where the height and the width of the box is same. You can draw 45-degree trend line from them. And when you can draw such 45-degree trend lines on point and figure chart, we draw it from important bottoms and tops. So once you draw it from bottom, if this is a significant bottom, you draw it from here. This is a significant top, you draw it from there. So once a price is above 45-degree trend line, it is bullish. If it is below 45-degree trend line, it is bearish.
So right now, the U.S. dollar yen chart that you have up right now, that you had up right now with the trend line, actually has potential to move to a bit above 110.
Exactly. So now, see, this is a current chart of USDJPY, and now this is well below the 45-degree trend line plotted from the top. Now, what is the importance of 45-degree trend line? Let me just explain in very brief. In order to maintain 45-degree trend line, like price will, if price will go above this 45-degree trend line only when the number of X will be more than number of O from this top. Same way, price will breach 45-degree bullish trend lines the moment number of O's will start printing more than number of X from this bottom. So it shows us the strength or weakness of the top or bottom from which we have drawn that 45-degree trend line. Now, currently, it is trading well below that 45-degree trend line from the top. So there is a weakness overall on the medium-term charts. In the short-term charts, in the very short term, we can see this, the 2x, the resistance at this 2x at this level, and the price has broken out from there.
Nice.
Known as top buy pattern, which is again very objective. So I'll also show it to you on this chart. So you can see this. Now these are the 2x where price has taken resistance and now it has broken up. So this is a downtrend overall, but there is a breakout in the short term. This breakout will fail only if price moves below this point, this column of O. Unless and until that happens, right now your short-term chart is bullish, though it is trading well below the 45-degree line.
Okay. Very nice.
Yeah, and third point that I wanted to discuss is counts that we have in point and figure charts. Like you can extend this column of X upwards, the column of O downwards. The formula of doing it is whenever, now for example, if this is the column of O, we calculate the length of this column of O, like number of boxes in this O, multiplied by box value and reversal value, and deduct it from the highest point, which is the next the highest point of previous column of X. And if you project it downwards, it will show you this vertical counts. So this actually extends the strength of the column. So and this cannot be plotted from any column of X. There are certain rules to plot this vertical count from any column, and the simple rules are you can plot it from the top and bottom. Now, how do you define top and bottom? Whenever there is a buy signal, turn to sell signal, this is particularly your this is your top. You can plot it from the immediate column of O from your top, or the immediate column of X from your bottom. So right now you can see you can plot it from here because there was a bottom and then the column of X, price has moved about it. So these counts in short term are active at this point in time in USDJPY.
So we're getting a question from the community. Can we use vertical counts in currencies? Have you experimented in currencies with this? Well, yeah, you're talking about the yen right here, so of course you could. So yes, your vertical count in the yen is 108.69 and then 110.66. So that that was from Prashant Kumar.
Okay.
Okay.
Yeah. So yes, you can. Yeah.
All right. What a great tutorial in point figure. Are you? Do you have any more slides to share with us?
All right. So these were the So these are the important things: pattern, trend, and count. When they are in sync, you can trade the charts, whether it is currency, commodities, crude oil, or any other chart for that matter. I trade Indian markets using this, and on all segments. So these are the books that I recommend if someone is interested. And even I have written a book on this subject, which explains everything right from the basics to the method of investments and trading using quantum figure charts.
Buy his book. Do you want to show your website?
Yeah.
DefineEdge.com?
Yeah. So my website is defineedge.com. And if you go to the section of videos, there are many videos that I have recorded, which explains point and figure chart, the method of construction, the method of counts, and how you do such analysis and all those things.
What a great presentation, Prashant. I want to thank you so much. You know, one thing I could say for sure after listening to you, X's and O's are more than Tic Tac Toe. What do you think? You like that?
Yeah, absolutely. You gave me a tagline for my son.
All right, yeah, go ahead, take it. I've got a million of them. So thank you, my trading warrior brother from India, and giving people another view and another way to skin a cat. And I saw many successful floor traders have their clerks on the side of the trading pit making X's and O's for them or running over to them when they got those breakouts, and those guys are left in Rolls Royces. So I appreciate you showing another way for people to go besides what we usually see with candlesticks and bar charts.
Yeah. Thank you very much for calling me on your webinar and giving me an opportunity.
It was a pleasure meeting you, my trading warrior brother. Everyone, that's Prashant Shah. You could follow him on Twitter at Prashant Shah 267. You can go to his website, www.defineedge.com, and you can buy his book and learn to be an X and O guy just like Prashant. So thank you again, Prashant. Thank you, F.A.C.E.
Thank you very much.
See everyone for Turnaround Tuesday. Good hunting the rest of the day. And remember, don't just count your pips, your blessings. See everyone tomorrow. Thanks one more time, Prashant.
Thank you very much.